How do you make sure that the fund you are considering to select is indeed an ESG fund? As you know, sustainable and responsible investing is on the rise. The COVID crisis and the threat of global warming have accelerated a trend that had already been in place for several years. The supply of so-called ESG or SRI fund is increasing day by day, while the approaches implemented are very diverse and of unequal quality. In this context, it is often difficult for an investor wishing to move towards this type of strategy to distinguish the wheat from the chaff. By this presentation, I shall give you some analysis keys and the main point of attention we use at BLI for the selection of ESG fund. As you can see in this table of contents, I will first focus on the global context. What is the framework with regulation? What is the universe we have to select in? Then I will go more in detail in the fund selection methodology, focusing especially on the extra-financial qualitative analysis. And then in the conclusion, I will focus on the main point we really consider for this selection. The ESG SRI environment in a few key points. As I told you, it is increasingly visible, all these ESG, so for environmental, social, and governance, these challenges are coming more and more to the visibility. Investing in this sustainable and responsible manner is a way for investors to contribute to the solution of this challenge. As the range is quite large, we have to dig in to find what we want and of which quality. I remind you, probably as you know, that regulation such as taxonomy, SFDR, CSRD have quite accelerated the last year with a good global objective of information and promotion of sustainable finance, but we have to follow and monitor its development to adapt to them. So it is essential, as you know, to take into account this context of rapidly changing standards and investment processes, as well on the regulation, but also in the practice of investment through continuous improvement in the control, in the selection, and so on. Let's go more in detail in the regulation. First one, you know, probably already know on the last weeks, months, it's SFDR. So it's the European Sustainable Finance Disclosure Regulation. Its objective is to provide more transparency in terms of environmental and social responsibility within the financial market. Through what? Provision of information on financial product, of course, in the context of sustainability. It includes the integration of ESG risk, but also the negative impact which have to be communicated. I remind you the broad objective. So it's to ensure the alignment between the marketing and the reality of practice, to avoid in some way the greenwashing. It's to ensure a kind of standard comparability of products in this area, of course, and then as broad objective to direct private investment towards more responsible investment. As you know, transition for climate change, for social best behavior have to be implemented with some money investment. Principle, the idea is to be implemented as well on the entity level, the company, financial advisor or management company, as well as the product level, the fund in this case. And it involves many areas, the marketing, paper, prospect and so on, but also the communication on the site, internet site. It's integrating the sustainability risk in the process of investment and also communicating a negative impact, possible negative impact of investment. As you know, the broad classification is in 3 articles, 6, 8, and 9. 6 is no sustainability objective, 8 is in the middle, so it's classical, what we call ESG, environmental and or social characteristic. It's globally ESG integrated in the process, and Article 9 is really an objective of sustainable investment, what we commonly called impact fund. The reporting part is quite important. We are coming to the level 2, where the link will be done between the classification in Article 8 and 9 and the taxonomy of sustainable activity. These allow me to go to the taxonomy page. The official sense of the word taxonomy is the science of classification. In this case, the European taxonomy is a strong standardized framework for company, investor, and member states to list the environmental friendly part of their activity and investment. The global objective of the taxonomy is, of course, to achieve carbon neutrality by 2050, the European Green Deal, and the way to do it, it's by the definition of criteria, so as to identify economic activities that do not exacerbate climate change and which encourage investors to support them. It is meant as such as an environmental compass, which allows investors to assess whether their investments are in line or not with the targets set out in the European Green Deal and the Paris Agreement, which consist, of course, and as you know, to limit global warming to less than 1.5 degrees Celsius by 2100 in comparison to pre-industrial levels. The principle, the baseline, is of course to define a limit, a threshold of the CO2 emission below which a company will be considered green. So contributing to positive climate change or limiting the global warming impact. It is a list, non-exhaustive and constantly evolving, of green activity and specific criteria. For example, green financial ratio expressed as a share of revenue or capex, so as to calculate the level of sustainability from an environmental point of view. The purpose is that financial institutions can have access to this information on the sustainability level of corporate company, and in that order, the company will be forced to publish their carbon footprint information this year or next year. The third key of this regulation context is the CSRD, Corporate Sustainability Reporting Directive, which is also something from the European Commission. It is the successor of the first reporting framework, non-financial reporting directive. Here it's again for the company outside the financial sector, and the idea is again to have a standardization of ESG and climate risk information. The universe of company target has been enlarged. It consists also of a part of control and audit of this information, and the purpose is to be consistent between this directive and the sustainable finance. Of course, we are going with some involvement towards digitalization, and you can see, as you can see on the image below. For that, I have done a broad view of the regulation context. I will go now more in depth in the universe of SRI fund. As you know, universe is not uniform. The way to invest in a sustainable and responsible way can be quite different, and several types of strategy can be applied. The financial and extra financial objective, as well as the portfolio practical characteristic, can largely differ. We could split the universe of eligible funds into 3 categories, as you see on the image below, from the pure financial strategy to the pure impact strategy. In the middle, we have kept 3 categories. The first one is the responsible approach. It's where major ESG risks are analyzed so as to be avoided. On the sustainable approach, criteria related to ESG factor are considered more in detail in terms of risk, but also opportunities. The integration is more in-depth in the process. The third category is what we call search for impact. There, the objective is to generate an impact on the challenge outlined in the United Nations Sustainable Development Goals, SDG. We will therefore focus on 3 main categories here in the middle. If we go more in depth in the first, sustainable ESG fund, as I told you, is really consideration of criteria related to ESG impact in the assessment of a company where we would like to invest. For the E, environmental, of course, is to analyze the direct or indirect impact of the company activity on its environment. Is there a lot of waste, a lot of natural resource used, pollution, and so on? Social or societal criteria. The idea is to check the direct or indirect impact of the company activity on stakeholder in relation to universal values, human rights, international labor standards, gender equality, and so on. For the governance criteria, which is well known, it would be more the way the company is managed, administered, and controlled, including its relation with its shareholder, board, and management. The main approach of fund we can find in this area would be best in class, best in universe, best effort. Best in class would be the best rated issuer from an ESG point of view within a given sector. So we take the best company in each sector, in energy, financial, technology. Best in universe would be the selection of the best issuer, again, the ESG factor, but regardless of the sector. This approach may lead to exclude certain sector where the company are structurally poorly rated, would be, for example, in the energy area with fossil fuels, and at the opposite, it could favor certain sector where company display good ESG practice. By instance, it could be in the healthcare or the technology sector, where the direct impact of activity would be first seen as lower. On the best effort, there it's more on the transition in the improvement side. So the preference would go to issuer where the ESG practice are improving. This approach is quite common, quite well known, and it has the advantage to consider several ESG factors. We should anyway be mindful of some pitch. First, possible feeling of unfinished business in the sustainable investment approach. It's fairly simple at first sight, but we can have the feeling that we don't see exactly the impact. There is also wide diversity in the approach, which require in-depth analysis. And again, in this large universe, it can be difficult to separate the wheat from the chaff. For illustration, in this sustainable ESG funds universe, I provide you the image, the contents of the MSCI All Country World ESG Leaders Index. This index is built with a specific approach so as to limit the systematic risk in comparison to the standard index. Indeed, it is built by including companies with the best ESG rating and representing 50% of market cap in each sector and region. Therefore, the global sector and regional allocation would be more or less the same as the standard index. In addition, it excludes some area, the company with severe controversy, quite low MSCI rating, or coming from sector related to alcohol, gambling, tobacco, nuclear energy, and weapons. As a result, you see the allocation on the sector side. We have slight bias, a bit more consumer cyclicals, healthcare and communication, a bit less energy and utilities. On the regional side, as you can imagine, a bit less US states and a bit more Japan, Canada, China, and Eurozone, especially where ESG practice are more communicated. At the company level, you can see on the top 10, of course, on the largest holdings, you have a large well-known company with general quality ESG profile, no particular thematic. These are large companies with several activities. Some, of course, in the information technology area, on the consumer sector, communication sector, and healthcare. In comparison to the standard index, you can see that this index excludes Apple, Amazon, Facebook, and JP Morgan. If we go now to the second category, so the impact fund, I remind you there that it is going above further to the ESG integration, but really having an impact objective. It is especially seen with the UN Sustainable Development Goal, SDG. You can see here, I remind you, 70 global objectives, which were not meant at first for the financial sector, but it's an interesting way to explain the impact an activity can have. It's a global coverage. The point is at this stage the lack of relevant impact indicators, a bit lack of data, but the growing demand for them is accelerating, and companies are quite aware of the need to provide this data. Financial actors are increasingly developing tools, data to have a better view on this impact. In this impact fund universe, we can also summarize the broad, the main approach. The thematic approach, which would be specific to a given sector or certain practice. Any investment are often concentrated in a company active in sustainable development. You would have, for example, renewable energy, water, waste treatment, health, and so on. The other approach we've seen is a global impact investing. There, it would be, the objective would be to generate positive environmental or social impact as well as financial performance. With this impact must be measurable. For example, it would be 2 or 1.5 degree alignment. The point there is again to find the data. Quite positive approach, new fund comings, Some area of attention again, biases in this type of investment strategy can be quite large. The performance track record are still short. We see more and more new funds in this area, but not so many with a large, long track record. Measuring this impact, as I told you, can remain quite a challenge. Our data and tools are still improving. And it is important to make a distinction between great stories and the quality of investment. For example, in this area of impact fund, the water theme is indeed an impact objective. Let's go to see the portfolio behind the theme. The objective is quite clear, essential theme of water, the blue gold. It is quite based on indisputable facts. You see also the ESG, which are linked to the water, ESG factor, and SDG from 6 to 14. Some reality, water stress is indeed real. There is a need to recycle agricultural and industrial wastewater. Depletion of this natural resource is pushing for more innovation, to new tools, and beside innovation, the need for maintenance and improvement of the current infrastructure is also quite important. So for the impact, the objective, we all agree. Be aware, if we go to see the portfolio now, this is a view of a famous thematic water fund we follow since many years. At that date, 56% of the fund was invested in two sectors. Utilities and industrial, which is quite more than the weight of these two sectors in the MSCI World Index, which was at that point less than 50%. It is important to be aware of this bias when you invest, especially a large part of your portfolio in this thematic. That was the part globally as introduction to the context and to the universe of fund. With that in mind, which we regularly monitor, let's go now in the fund selection methodology itself. The key principle we have kept for our methodology is first, as I just told you, understanding the funds which are available on the market. It's to know what is the universe and what we would like to invest. We keep a global approach without focusing on a specific thematic, so as to have the three-factor E, S, and G, and to have different approach, ESG strategy and impact investment. We also focus on the qualitative aspect in the analysis. Why? The point is to clearly understand the approach, financial and extra-financial, and to be able to evolve in our methodology. We have a solid foundation, some analytical tools, and an experienced analyst team. We follow the evolution of practice in terms of extra-financial analysis and sustainable and responsible investment. We also, on the financial side, follow historical performance, and we try to understand the past reason of outperformance so as to extrapolate, estimate the chance of future performance. We also, of course, constantly monitor the fund we have selected. As a broad overview of our methodology, we have first a quantitative analysis to identify the fund which corresponds to the objective. It's really digging into the broad universe and choosing the criteria, the filter, to have the kind of fund we would like. As a second step, we go more in detail on the qualitative side. Again, according to predefined criteria, first on the financial analysis and then on the SRI profile. The third step is a monitoring and control, as well on the quantitative and qualitative side. Let's go now more in detail in the subject of today. It's the extra-financial qualitative analysis. We have focused on this for objective to create our own SRI ID report. First, it's to inform on how the management company positions itself in terms of sustainable and responsible investment. What is its investment philosophy in terms of ESG? What specific action has been carried out? Second is to know how the fund itself incorporate or not a sustainable and responsible investment approach. What degree of integration, what methodology are in place? What are the possible impact of the investment strategy and the risk return profile? We have done this analysis on the full selection list we had, whether the fund were ESG or not. It is quite interesting to have a broad view on all the funds we had selected. Third point is clearly a large work on the document. There is a large amount of information which are quite different from one management company to the other. But we've done this work of analysis in order to have a global and comparable view across the whole range of selected funds. We have also improved our knowledge of the different approach and degree of integration of ESG. We are also quite conscious that this approach is expected to be improved and refined. As I told you, the framework is quite evolving on regulation and practice. Therefore, we have done our own questionnaire, which we send each year for update. Now, the broad view. How sustainable and responsible investment is addressed in each company, in each fund. Our goal is to understand it. So as I told you, we send a specific questionnaire to identify, on one way, the implication, evolution of ESG at the management company, and second, the level, the degree of SRI ESG integration in the fund itself. We collect all the relevant documentation. So first, a questionnaire, which is filled in a different way, often quite long at some, quite summary for others. And then all complementary documents as the voting policy, engagement procedure, sustainable investment policy, sustainability report, impact annual report, and so on. We also keep regular meeting and exchange with the investment team, and as a result, we have created our own SRI ID for the management company and the fund. First, let's go in the profile assessment of the management company. The main point to your right is the signatory of the UNPRI, so United Nations Principle of Investment. What is it? Sign. What is the latest rating? Are there some reporting available? And second, is the company signatory of other charters, or is it a member of association which promote sustainable and responsible investment? Also, on the management company level, is there a CSR, so corporate social responsibility approach? Is there a charter? Is there some public information on that approach? It can be on the internal side, so well-being of the management company employee, some gender equality, quality of working condition initiative that can be seen. On the external side, is there some philanthropy, support of charities, sharing a part of the revenue on that area or not? And third, as again, globally at the management company level, is there a global exclusion policy for specific sector or activity? Be now aware of the left part. We consider clearly the company size in our analysis. As you can imagine, the size, the level of tools, the quantity of tools, of resource can be quite different from one company to the other. For smaller company, it is more difficult to develop a high level of engagement. There is less resource, and their influence can be lower to large international company. It is also more difficult to, for time and money, to have a link to a large number of associations and charters, and they often have a smaller research team. But at the opposite, smaller company can be more flexible to adapt and innovate rapidly. We take that into account so as to be able to compare different level of implication. Second part, for the company, we also check if they have a global responsible investment policy in place. If yes, which kind? Is it a basic integration of ESG criteria, or is it implied, deeply rooted in the investment? Is there also at the company level a global voting policy and an engagement policy? If yes, how is it done practically? What tools, what type of engagement process, and what are the objectives? Is there some report, some practical information? Also on the resource side, we are asking how it is organized. How many people? Is there a separated team? Is it integrated in the investment team? And what are the influence of this ESG analyst on the investment process? And last point, what tools, which ESG data provider are used by the management company, and how are they integrated? Is it simply data available, or is it completely integrated in the process with some limit, with some impact on the weighting invested in the portfolio? As a conclusion, this analysis on the management company highlight how many steps have already been taken by the management company. The idea is not to put a figure, a kind of a final score, but really to understand at which step of evolution on ESG is currently and each year the management company will analyze. If we go now in the fund itself, we have different points we also check in detail. The first one, again, is the exclusion policy. Beside global policy, the global exclusion policy of the company, is there some specific exclusion criteria for the fund? Note that the controversial weapons are excluded directly for Luxembourg CCAR. Beside that, are there other criteria, such as weapons, other weapons, tobacco, alcohol, thermal coal, animal testing, gambling, nuclear energy, and so on? Is there an official maximum allowed, or is there simply a consequence of the theme of the fund? You can imagine health care funds, normally no direct investment in fossil fuel energy, for example. There, the strategy itself. Is there a presence of an ESG component in the fund investment process? If yes, to what level? What is the degree of importance given to the responsible investment process? Is the universe restricted? Is there some strict selection criteria or company selection? Is there only according to assessment of the portfolio manager of the analyst? Is there a clear link between the ESG profile and the portfolio weighting? And also we ask, is there a novel rating objective for the fund itself or on each position? Some fund, for example, could ask to have a global MSCI score better than its index. Some could ask to have that at each position level. For the fund, we also ask if there is an impact objective. Possible impact objectives are listed, and we ask if the fund is considering this objective and if there is some related reporting on that. The most common one would be the carbon footprint, waste, water management, supply chain impact, the importance of diversity, and so on. Let's go to other point we analyze at the fund profile. One indirect result is really the consequence of this ESG process on the portfolio management and its structure. Do the ESG criteria that has been integrated in the process, do they lead to a structural bias in terms of sector, market cap allocation? Again, as we have pointed in the universe of fund, some fund as a water fund can have quite a large bias to some sector. We also look again at the resource side. We had the global view at the company level. Now for the fund itself, we check if there is a specific ESG analyst team, and if this team exists, what is the link between this team and the investment team? If the ESG analysis is done in the investment team, it is clearly more integrated, but it can be also less specialized. We don't have an official good or bad view. We really try to understand how it is done practically, beside the marketing, to understand what is the implication and what is the real practical ESG integration in the fund. Last level is the communication information. What kind of report is produced? What is their quality, the content? And last point, some labels and official classification. It adds some information, some degree of implication, but it is becoming more and more common. So we go more in detail, as you have seen from all the points I have explained. We go more in detail in the fund and the management company itself, how it's done. As a conclusion, for this analysis on the fund profile side, we can calculate a score indicating the degree of involvement in the investment process in terms of sustainable and responsible factor. To give you a broad view now of the result of this long analysis, first you see on a management company, we have different points. We summarize with a graph with some color, the points which are quite developed at the company, the points which are still in evolution. On the fund itself, we summarize the exclusion part, the ESG strategy, the impact objective, if there are some, and also the impact on the portfolio. Is there some bias on the sector, market capitalization, and it could be also on the regional allocation. This is the example of the first view you can see on our SRI ID report. That was a broad view of the extra financial ESG, in this case, qualitative analysis. I go now rapidly to the traditional analysis we do to select fund. As you can imagine, we also go quite in detail on the financial side as well on qualitative part. You see here rapidly the main point we look at. The company itself, it's the philosophy of the fund, the management process, how the research is organized to find a company to invest, how the portfolio is built, is there some bias, how the risks are controlled, how the team is organized, is there a star portfolio manager, is there a large team, and the fees. Are the fees quite reasonable or not? It can happen as well. So really, it's the objective is to have an exhaustive assessment of the fund to clearly understand all the parts. Don't forget, we look at extra financial, but also financial result. So the quantitative part on the risk performance style profile is also quite extensive. The objective is clearly to understand from the figures and from the fact, from the due diligence, the more we can on the fund to be able to understand past performance, the past profile, and to be able to evaluate the future evolution of the fund. At the conclusion, we stay quite convinced that this ESG area and the ESG fund analysis is an exciting and an evolving challenge. We have in mind that first important step is to understand the universe and to define the kind of fund, the characteristic of the fund we are looking for, you would be looking for, depending on the client needs, in a universe quite diverse and quite growing. First, identify the type of approach. Is it a simple, responsible approach, an ESG sustainable approach, an impact approach you are looking for? It's important to identify each one for each one of your client, of your portfolio. What are the needs? What are the priorities? Is it more on the ESG impact, extra financial part, and taking into account the strength and the weakness of the different type of funds? It could be, for example, useful to have different type of strategy in a global portfolio. On the fund ESG analysis, we keep in mind it's important to have a qualitative view of the company and the fund itself. The idea is to have a consistent view of the ESG integration at all the levels. For the company, we remind you the key points: the UN Paris signature, the Corporate Social Responsibility Charter, policy on core exclusion, policy on responsible investment, voting and engagement policy, so have to have a clear view of the objective and the global philosophy, and having also a view on the resource and tools that are practically used in this area. For the fund itself, key points would be a specific exclusion policy, a clear responsible investment approach, integrated into the company analysis and the portfolio construction, and the transparency side is there ESG and impact reporting. Can we have a view how the ESG is done at each position at the portfolio level? We, as a conclusion, take a global approach to investment, including ESG of different strategy, but also financial aspects. We take into account the market context, the asset allocation, the behavior, and bias of the chosen funds. Is it ESG, impact, thematic, equity, bond, alternative? Therefore, I tried to give you a broad view of this quite large thematic, the context, the universe, how you can select with main different points, the company, the fund on the ESG side, and we remind you to keep a global approach, be aware of some bias, to be able to offer your client quality and diversified ESG solution. Thank you for your attention.